All right, guys, welcome to another video here. Today we are going to talk about um, a topic that is really cool, and I tend to like to delve into it a little bit. I know a lot of people, when we're looking at trades and we're looking at different ways to go about trading, we see opportunities when the stock market goes up. But there are opportunities when the market goes down as well, and there's also opportunities when it's sideways. So ultimately, this is just a continuation in a series of videos that we have created to be able to help you guys understand how you can trade options when stocks are moving up, as you see here, but also when they are going down. And you see this price action as well, and then when stocks are trading in the range. So today we are going to talk about how to trade puts, and that is specifically for when a stock is going down in price. So if you haven't already, please hit the like, subscribe, share out the video, hit the post notification bells as well, because we are creating this series specifically for traders who are, novice, intermediate, as well as advanced traders. Because what we're ultimately going to do is we're going to look at some advanced techniques here as we get a little further along into the process. So, really, what I'm doing is taking you guys on a journey to where we're going to start at a basic level understanding and then really get into the meat and potatoes. So, you guys want to stick and stay with this, all right? Now, what we're going to look at today is ExxonMobil, which is what you see on the screen right now, ticker symbol XOM. As you can see, excuse me, it has a current trade price of $78.67. Reason why I highlighted this particular stock is because as of this recording, it is March 2022. So, for many of you, if you don't know, we had a situation where Russia invaded Ukraine, and in doing that, it created a series of events to the point where gas prices went through the roof. There was a lot of regions where the gas prices literally doubled, where people were paying $2.50, a gallon for gas, and now it's sitting somewhere around $5 a gallon. Some of the major metropolitan cities, you see it anywhere from $6 to almost $7 a gallon. So when you see tremendous price action like that, you tend to get these kinds of consequences in the actual stock market itself. Remember, we're looking at ExxonMobil, and this goes back to the 24th or the 25th of February. And as you can see, it was at the low of $74.03. And then as you saw this gradual climb take place here, a little consolidation, and then the tremendous spike up to $91.51. And this was going back to March the 8th. So obviously there was a lot of action here, okay? So if you're an investor that is what we call bullish, we always tend to look at trades where we're looking at the left side of the screen to the right side of the screen, and we want price action moving from left to right, which is what you got here in this range, okay? But what you also saw, and what a lot of people began to speculate at the time, is because these prices were running so hard and so fast that eventually there was going to be some kind of pullback. So when there is pullback that takes place, what you can do is you can trade that as well. You can say, okay, it hit the high here. Now there's going to be some retracement, and buying puts is one way to do that. So that's the reason why we're going to go ahead and we're going to take a closer look at that. Now, what we're doing right here is we're looking at the hour chart for a 20-day time frame. I tend to look at the 5-day 5 minute or the 5-day 15 minute, but for the sake of this, I blew it out first to give you guys a better understanding of what was going on in the marketplace. So obviously, when we look at the 5-day 15-minute chart, as you can see, this particular chart is moving from left to right in a downward motion, okay, as opposed to a stock moving from left to right in the upward motion. This is moving from left to right in the downward motion, okay? So this is where there's a ton of opportunity to be able to trade this particular type of strategy. And at the end, once we actually play out the trade, I'm going to show you exactly just how powerful this is with being able to trade as little as $100. So we're going to jump into it and take a look at that as well. So as you can see in the 5-day time period, The high was $84.91, and that was at this one candle here. You see the low kind of settled in at $76.25. And as you can see, there's a slight movement upwards. But if some people said, okay, there's going to be some continuation downward, this is where we would be looking to trade that put. So, if you guys don't know already, I'll go ahead and recap it real fast. But you want to go to the trade section, and in that section, you're going to see what we call the option chain. The option chain is going to derive the dates in which you are able to trade that particular option, whether it's a call or a put, or any advanced kind of trading strategy as well. So we indicated the most recent one, or the one that's closest to the expiration, which is March 25th, 2022 in this case. And we sit here and we say, okay, listen, we believe that this stock is going to continue to go down in price. It's going to continue to kind of move down and settle in at a certain level. Now, based off your technical analysis and any other analysis that you guys derive, let's just say that you came in and said, okay, let's go ahead and take the strike price of 77, because you believe that it will continue to move down from where its current levels are. So what you would do is you would right click on it here, you would hit the buy, and you would go single. And then here, obviously, it brings up what you are looking to trade. Now, what I'm going to do is just indicate one option contract, because what we know about options is that whatever number the ask is, right? You multiply that times 100, and that's what the cost of the trade is going to be, plus any other little fees. So, because this is actual, round number, this is $1 at one option here. We'll go ahead and hit confirm and send. And as you can see, this is where the magic happens, guys. So it gives you all the breakdown here. Again, I've said this in previous videos, but I'll reiterate the fact here. This is the reason why I really like to utilize Thinkorswim when we are trading options, because it makes it really easy to see and understand. It tells you what your break-even stock price is, which would be 76 in this case, because you took the 77 strike price here, right? So your break-even is 76. So as it continues to move down, pure profit from that point, guys, right? So as you can see, the cost of the trade, including commissions and fees, you have the $100, which is the equity that you put in to buy the actual option. When you actually put the put in, 65 cents plus a penny, that has you at $100.66. And this is where it's really powerful, because as you can see, the max loss that you have on this particular trade is $100, which in essence is what you put in. The max profit is $7,600, guys. So again, and that's part of the reason why I like this strategy, as opposed to just straight short selling, because we're going to kind of talk about the main differences with that, because a lot of guys would just like to short the stock, which is perfectly fine. But with traders, a lot of people don't understand is that if it reverses and it blows through your number, then with short selling, you are exposed for more than what you actually invested, as opposed to this particular type of strategy with the put. If this reverses and it climbs in value, you're only going to be exposed the $100, which shows your max loss here. So that's the reason why this is a very powerful strategy, because in essence, what it does is it limits your upside risk, and at the same time, it can maximize you on the upside. So in essence, it maximizes your downside risk. Like I said, upside risk. So it maximizes the downside, the amount that you can actually lose, right? Where it maximizes the upside. So that's the reason why this is a very powerful strategy, and one that I tend to take a look at, especially when you see these kinds of situations in the marketplace where you have some trades that are really heated, right? As you can see, this literally took a span of, let's see here, because we were looking at, what was it, February 24th? So from February 24th to March 8th, we're talking about roughly 2 to 3 weeks, right? That's a very short span of time for this move to take place. Normally, in more established stocks, especially like an ExxonMobil, this kind of move would could potentially take months in a normal market. But because there's extenuating circumstances, it accelerated everything. And in the event of the acceleration, there's also deceleration too, guys, where the stock is going to reset itself a bit. Because you have to understand there isn't anything that will go straight up and never come down. It's just the way that things work in general. Anything that goes up will have a opportunity for you to trade it on the downside as well. I think this is one of the most effective ways that you can do so, without really putting a ton of risk into the equation. So, really, that's really what we tend to look at, guys, because whenever we trade, we always want to make sure that we're putting the risk in our favor. So, in essence, if a trade isn't working right, you can get out quick. You manage your risk, okay? Because it's very, very important that you understand and treat money as if it's literally an employee. I've said this before. In essence, you have a certain dollar amount that you put it into the marketplace, and what you're hoping to do is have that come back to you with even more than what you sent out initially. And what you want to do is just do that over and over and over again. If the trade doesn't work right, if it's something that's going against you, then you cut the trade short, guys, and you get out of it. Simple as that. Because there's times when it'll come back, but more times than not, it won't, and that is okay. Because if you limit that risk, then you don't have to worry about, you know, a potential of it going even further. Okay, so it's something that you guys just need to understand and kind of pay attention to. But yeah, that's pretty much the summary of it all. Again, you guys, we are going to look at a few different things. So as we continue to progress on into more of the videos, you're going to see we're going to talk about these different strategies. Some of these I utilize quite a bit, some of them not so much, but we will definitely talk more about them. And again, guys, like I said, this is just a series where I want to make sure, by the time you're done with this, starting from the first video to the last video, that you guys are equipped to be able to utilize various trades depending on what's going on in the marketplace, because things don't always move up, things don't always move down. Sometimes there's sideways action as well. There's times of year where certain things take place. So it's just another tool in your toolbox, guys. If you look at it from that perspective, then you'll kind of be able to see, okay, we have this going on, and this time of year tends to get pretty flat. You can trade that, right? If you see things happening where it's earnings season and things have been moving in a certain sector, then you can trade for a breakout. Any kind of way. There's multiple ways to do this, okay? But the most important thing is to look at these kinds of trades as tools in your toolbox. I say it all the time. You cannot build a house just with a hammer, guys. You need a saw, you need a screwdriver, you need nails, you need a lot of different things. And so if you kind of look at this and these trading strategies that way, then you'll be in a better position to say, okay, yeah, I can go ahead and utilize this today because the stock is doing this. Or we need to go ahead and adjust this because the stock is beginning to do that. Okay, that way you're not pigeonholed and you say, "Oh God, I missed the move, so now I can't trade it." Not true. You can trade it various ways. All right. Okay, guys. So with that said, please, as always, make sure you're hitting the like, subscribe, post notification bell, as well as sharing out the video, because we want to continue to bring awesome content just like this here. So we will catch you guys on the next video.